Hello, everybody, and welcome to Tech Excellence Podcast. Today, my guest is Maja Voje, and I'm Monika Dawidowicz, your host today. Basically, we started this podcast to support startup founders and the entrepreneurs on their journey. And every week, I'm interviewing experts who share what they have learned on their way. And today, it's Maja, and we're going to talk about pricing strategies. Hi, Maja.
Hey, hi, Monica. Thank you so much for having me and introducing me to your community. Initially, we wanted to talk about go-to-market, but then you said we should be more specific and we should be narrowing down on
Absolutely.
something which is really an important subject. So Monica said, prepare a lot of examples, be as hands-on as possible. And this is my mission from today. Happy to be with you.
But before we get to pricing, I would like to highlight some of your achievements. So let's make it a brag column. You're a book author, a best-selling book author, and I have this book right here. Oh, we both, wow, perfect.
So big.
Yeah, definitely. We need to make a screenshot with the books. For those of you who are just listening without the video, we just both actually put the book in the frame. Maja is the author of Go-to-Market Strategist book that's available right now. And actually, I have to say it's a masterpiece, Maja. I know you have broad experience as a marketer, as a mentor, as an advisor. And I have this impression that in the book, you've made a research of all the methods out there. You picked the best ones and filtered through your experience. So definitely anybody who's launching their product or services or already is on the market, but struggling in some ways should get this book and try to pick what resonates with them.
Thank you so much, Monica. It has been like a wonderful intro. This book, it took 1 year of my life, and I was just working in the trenches a lot because, all advice out there is like Silicon Valley, America style. And I was just like, hey, in Europe, we don't have as much funding. In Europe, you need to be profitable in a couple of months. You need traction. So let's try to write something for bootstrap founders, for founders who are just getting started. And just coming from marketing and growth background, I wanted to explain my fields to technical people and product managers the best that I could, so it wouldn't be repulsive and it wouldn't be a turnoff for them, because at the beginning, you know how it is, founder does all the sales, you need to. But nevertheless, personally, I learned the most from just exploring product and pricing, because these were not my blind spots before. I always knew that they were important, but I wasn't directly making these decisions. So I was just thrown a product and say, now let's launch. But I think that these are very important pillars for how the product will land. And I always require now to be a part of this decision making as well, because it does make a difference in terms of how much traction can you gain later.
Okay, so maybe let's jump straight into the basics. What is pricing? Because, some people say, okay, it's just putting a price tag on a product or service. But there's a science behind it. You can't just do it like that. So what is pricing anyway?
Cool. So when it comes to pricing, a lot of people are literally thinking what you said. So set it and forget it. Let's just get rid of this. Maybe let's be a little bit cheaper than my competitor, and fingers crossed that we are going to sell more. Well, this is not always the case, because competing on the lowest price possible is the race to the bottom. And if you are living in a country with some sort of living expenses, where inflation happens, you cannot be sustainably building business upon this. That's why I see pricing as this exchange unit for value exchange. Imagine that product creates value to a specific market segment, and pricing is your mechanism of just capturing a certain amount of value. Usually this is between 10 to 30% in order to sustain your business and to have more money to build beautiful products later on. And I was thinking about pricing really from the psychological manner as well, because you know how it is, you come from Poland, I come from Slovenia, we had communism, and everybody had the same salary, right? So when you are earning per hour more than your mother does in a month, you have this, what the hell moment. like it doesn't compute, like you see that it is not being fair, right? But in reality, when it comes to pricing, and if you think about this as this exchange unit of value, it becomes liberating, because you know that you are building something good, and you know that you need to sustain the business. So suddenly it becomes mission critical to deal with this pricing and to make sure that we are not leaving more than enough money on the table, that we are capturing enough value in order to cross the chasm.
Okay, it sounds really liberating, as you've mentioned, because sometimes we feel restricted that, oh, I shouldn't charge that much. I don't even know how much value do I bring to the table. So how can I charge so much?
I have these calls on a weekly basis. So like almost every day somebody calls me and asks like, what price should I put on this offer? And the first thing that I usually tell to them is, okay, have you gotten like any competitors offers? Because in GTM, in go-to-market stage especially, we are a little bit binded, a little bit constrained, like let's say 20 to 30% plus minus from whatever competition is doing, because we are new to market and we are always compared against existing alternatives. And God forbids that existing alternative is an Excel spreadsheet, because then you would have to display 10x value for the target audience. But nevertheless, exactly. In terms of benchmarking, like this is a pretty simple exercise. Everybody can do it. You can just like check out a couple of pricing pages. You can ask just like for some quotes, or your friends do, and you have this paradigm. Value often comes with a delay feedback loop. So you don't know exactly how much money are you making for them as they are buying. You know this later. That's why it's also okay to start with this hypothetical price and then see and increase it later as you know how much value are you capturing, if you have the case study, and also your product is getting better. You're all the time working on the product and you are delivering more value. And you know what else is true? Inflation. So in times, prices should definitely be changing as your audience is changing, as your product is changing, as the competition arena is changing. So yeah, just be dynamic in the ways how you think about pricing. Don't do it once and then do it again in 5 years.
And are there any patterns of mistakes that you see when it comes to pricing? Because you've worked with so many companies that probably
where to start?
Some examples. So maybe the most common ones, because probably there's a chance that some of our listeners have done it in the past, or maybe even are the victim of that mistakes right now, and just they keep the money left behind. Yeah.
Cool. I would start with just like an underlying fear, which is deeply wired in our brains and our biology, which is fear of rejection. Because evolutionary humans have been developing to be tribal creatures. And if you are left from your tribe, you are in danger, like you probably would not survive. So just like this fear of rejections and lost aversions are very hardwired into our brains. This is why even if you know that you should be charging more, it's really awkward to send out those emails and your hands will be shaking as you are typing them, because this is evolutionary wired into you, and that's okay. However, we need to have a very firm conversation with ourselves. What are we doing business wise? Is our product getting better? Are they getting more value out of this product because they are a larger client? Just think about the value. Value is the best proxy that I have to address this question. Then just like pricing, how we think about this could also be an opposite way of our imposter syndrome. If you don't believe that your product is really delivering that much value and is worth it that much, when you will be doing sales calls, your voice will just shake and you will get nervous and you won't be that convincing. So you really have to believe what you're selling, and you need to work your way up towards this. Last but not least, it's just like when it comes to pricing, I think the third component just like comes from this avoidance of doing it, right? To just like making it as an easy exercise, to copying like somebody else's prices because you don't want to go to the nitty gritty. And this is laziness. This is just like something that you don't want to do. But pricing is the only part of the marketing mix that actually makes money for you. Others spends it. So you should definitely do it. And also sometimes you are operating with imperfect information. For example, I just had like a mentee who was he has a VR sets, and they are doing automated projections, how to like engineer the landscapes for fairs and big events. And he was selling to Saudi Arabia. He like did a proposal which was approximately 15K, and he was selling on 50K in this part of Europe. But Saudis just like denied his offer, laughed at his face, because the lowest competitor's offer was 50K. And just like these clients didn't think that the product is any good, that it can deliver the value. And this
because
was
the
such
price
an
was
eye-opener
that
for
much
them.
lower.
Exactly. But after you think about this, right, it makes sense, because if you come from Saudi Arabia, you cannot even like leave your room without being air conditioned. You have to like do stuff in order to get drinking water, and just like costs of operating a business are probably a lot higher. Also, willingness to pay is much higher. The same happens in Europe. For example, if you are selling to Scandinavia, where the standard is different. Little did he know that he is anchored towards different benchmarks that in his native market. And this is something that I need to just like stress. Sometimes monetization, and 72% of new products don't survive because of mistakes with business model and monetization. There can be nothing really technically wrong with the product. It's just like a best business model that we are building. So it's really important to make these decisions with confidence, to make informed decisions, and not to set up your product on this obscure market with really low willingness to pay, whereas there could be a potentially different market on which you could thrive. And that is learning by doing. These are iteration, this is research, but also tons of sales conversation and customer discovery in order to finally make the right decisions.
Okay, so do you suggest that the sales department and the marketing department and the product department, they should just work together on developing the pricing?
Oh, I'm even bolder in that department. I would even say that like product people and founders should be involved in sales. And if possible, the best way to really validate willingness to pay and just like price point is to go there on these sales calls and ask like if they would buy a phantom version of the product, if they would pre-commit to buying the product after a certain milestone or something like that. And this is where you get the majority of information. I mean, you can go out and you can send a bunch of surveys. You can do like Gabor Granger, Van Investor Dorp, you can do conjoint analysis. But in reality, when you are especially marketing an innovation, these survey results are not very accurate, because people might say that they will do it. But at the end of the day, if you are really thinking about this, whose job it is to set up pricing? Is it customer jobs? No, it's your job. So it's really, really, really important to just like go in the trenches and try to just like illustrate your offer with a price and iterate with it. The first version is something that you will make up, like literally based on market research, based on competitor analysis and your assumption of how much you think you're worth. But the second and third iterations will be much better. So I'm always saying you learn the most if you are out there speaking with people, not watching your spreadsheet. I know it's scary, but this is just like the way how humans learn. It's hands-on learning is much more effective. And even if you think about this, how much time would it take you to send out a proper survey and get the right type of responses if you would be getting the right type of responses in the first place, in comparison if you just like are there with your document, with your PDF, and do like 10 or 20 demo calls, sales calls? What else is have you ever done it, Monika?
Yeah, I have joined some sales calls.
Awesome.
So
How was it?
I have. Yeah, it was honestly these leads were lost, but I've learned so much from the customers' feedback and what are their problems. Why have they not chosen our solution? Why they have chosen the competitor's solution? And sometimes, they say it's not the price. Anyway,
it's the price.
Even learning from the calls with clients who will not buy from us eventually, this is a lesson. Yeah,
I would say that you learn more than with your clients, because especially when you are like in early stages of development, and I'm so happy that you said this, because these are like churned customer interviews. Customers that bought from you can do like great usability interviews, and you can learn a lot about how to smoothen the user experience for them. But with customers who didn't buy and are still willing to talk with you, you have like a great signal there that they have a pain point. It's just like you need a little bit of adjustment, either like in positioning department, rarely in pricing department, because unless you have some very cluttered markets such as CRM or some sort of other really red ocean technologies, you have like a little bit of a wiggle room how you can display value. But nevertheless, this is such a good signal if people who didn't buy are willing to speak with you, because that means that you definitely have the value. You just have to work on it, and you can learn so much from this.
Yeah, and even if it doesn't work with this one, it's some kind of data we can use in the future.
Yeah, but imagine, like, it's such a strong signal of product market fit. I'm really hyped about this because, as a customer, and just like I didn't buy from you yet, I would still talk with you for 20 minutes or like 30 minutes. That means that like you're really onto something here, because what else could be motivating these people to just like engage in this communication? That's huge.
Yeah, definitely. And it's worth to take advantage of those opportunities if we have them. Hey, let's get back to pricing. One of the consequences that you said that are possible if you don't set your prices right is actually going out of the business.
Yes, that can happen.
And that's a severe one. That's a severe
one.
Quite.
No, we're laughing now, but it's dreadful.
Scary.
It's really dreadful in practice. Like we had one team, they sold something like analytics software to like Fortune 500 companies. They fucked up pricing really bad. So they sold like yearly subscription for 10K. And the big ones, the amount of legwork when you are servicing these clients, this team was just exhausted. Like everybody was just servicing this client, and yes, it was a beautiful use case and they were happy with it. However, it drained all their product resources to just like catering this client. So there are horror stories down this department.
Okay. Yeah, so definitely it makes sense to put some more effort into pricing than just setting and forgetting. Any other potential consequences, maybe less severe ones, but still, better to avoid?
So let's talk about target audience and whom you are attractive. In theory, you might be optimizing for adoption from a get-go. And if you are being a social network or like dating platform or a game or some sort of B2C product or a marketplace, that's okay, because you need volumes in order to make it happen. But in most cases, especially B2B, you should be optimizing, if you're not extremely product-led, for profit, right? And a lot of times I see teams early on attracting the wrong type of ICP in the product, because they are just positioning there as like either free or cheap, and they are not testing this willingness to pay. It's not something that like is attracting the right type of people. And I've been talking about this with Enzo Vigo. So he's a founder of June SO, otherwise a Frenchman, but he was in Y Combinator and is very famous on Product Hunt and LinkedIn. And he said that just like in early days, they managed to attract indie developers and just like early adopters to the product. But there was a huge issue because those people were not displaying any indication of willingness to pay. Like everything would be too expensive for them. So they were amazing product testers. But after like they were pitching to investors and wanted to have the real business, the segment that displayed willingness to pay signals were B2B SaaS companies, because they needed this advanced analytics software in order to make better business decision, and that had a lot of value for their business. So they literally had to change positioning and messaging. They literally had to just like do things differently in terms of marketing and even like product tweaks after they learned this. And my big message here is always like, if you are bootstrapping, if you are really early, test willingness to pay as soon as possible. Don't just like go and attract some users on the product. That's great for bug hunting, but it's not great for building business. If you want to make money with this within the next 3 or 6 months or so, you need some sort of signals that not only will they use it, but they will also pay for it. And that's huge.
Yeah, that's huge, definitely. When the department or the company decides on the actual price, what are the factors to consider? Obviously that initial phase, it's a mixture of benchmarking and maybe like some assumptions or educated guesses. But once we gather the data, what are the other factors to consider here when we're deciding on the pricing strategy?
Cool. So let's paint this landscape again. As you said, there is competition. These are benchmarking. Then we have like what is called a value metric. So what value is our product delivering to people and how much can we capture of it? Ideally, we would have an element of value pricing there, not just like smash the price, 10 euros for everybody and let's see what's happening. And then we also need to see how this value is being delivered throughout different segments. Because if you're selling something to Monika and Maja, like video recording software, we would be paying less as individuals than if you would be selling these to freaking Disney or Walmart, right? So you need to have your pricing packages done in a way that you can capture more value if client is receiving more value, and you need to have at least like 3 or 5 options in order to make it happen. Is that always the case? No, because I was just like analyzing a bunch of product pages, pricing product pages, and for example, Calendly is a really interesting example because their free version of the product is not even limited for the amount of meetings. You can always like have one event type and you can continue to use it. And that's a very, very important lesson in terms of what sort of business model game are you playing, and they are optimizing for adoption. Because every time that I send you a Calendly link, there is a potential new user exposed to it. They have good experience, and that's their growth loop. This is how their system spins. And if you have an instance like this, like Calendly is not stupid. Calendly would not smash the usage limit there, 50 minutes per person or something like that. They love this because it's bringing new people in the ecosystem. Whereas once you get more serious about your selling attempts, like video selling attempts on meetings, you would require different meeting types, and then you start paying like $10 or $12 per month, something like that. And you can monetize your meetings and you can do advanced integration, but only after you have displayed and consumed enough value from the product that you are being considered a serious user. And then they have the enterprise package, which is story of its own. This is always a black box, but you know how it is. If you're, again, like a really big company, Fortune 500, they shouldn't be charging you 10K a year. Oh no.
Exactly. Anything else to consider while you're setting the pricing packages?
Yeah, I think it starts with value metrics, right? To just like figure out what people are willing to pay for and how much is fair to them. So you asked 2 questions here. I learned that from Ulrich Schmidt. He's an author of like B2B pricing book, and I just love these 2 questions that he sets in early stages before he even considered putting the price tag to it. So to just like have this hypothesis of the offer that you will be presenting and talking with, let's say, 10 people up to 20 people maybe, and asking them, so how would you like to pay this? How? What is the package? Is it per user? It is per transaction? It is per apical? Like, how would you like to pay for this? And how much would it be, wait for it, fair to pay for it? Fair is a really power word here because, you know, if you ask me how much would I pay for this, I would be as little as possible.
Probably nothing if I could.
Coming from the same cultural space here. But nevertheless, when you change this to fair, like what's the fair unit of pricing exchange, you have like a really, really, really good maneuver here. Then you do a sanity check if like this makes sense for your business. Can you keep the lights on in your office? Would this sustain? Otherwise, you would be proclined towards interviewing a different segment and rethinking this. It's a loop, these are iteration. But when it comes to just like setting up the packaging, in addition to tying it to this unit of value transfers, like how many videos did you record with Loom, such as like how many store admins do you have on your Shopify account? What else is true? How many transactions did you did through Stripe? That is a very tricky one. I don't like this one because it's always something that I hate to pay. But nevertheless, this is like something that makes sense naturally. And also, just like in terms of packaging of the prices, you can have hybrid models as well, right? A lot of times people are just like thinking, okay, I should find one value metric, and especially if you don't have a feedback loop, like what the revenue is, that it would be such a no-brainer as Stripe or like other payment processors such as PayPal. You can have hybrid models as well. So they might be paying per value metric, like per amount of mirror boards that you can create, and the accounts and the user accounts that are in the account. So just like, it's not an easy exercise. It usually takes months to do it right. It usually takes like 20 to 50 customer conversations. But you know what? All you need to do at the beginning is just to have a hypothesis. So do your desktop research, see the competitive benchmark, talk with some people so you would understand what they are getting from it and what would be fair to pay for it. And then just like go test it on like either sales or customer discovery calls, or put it on the website and see what happens.
Sounds like legit science.
This is how we do it in practice. I was pre-selling with Google Docs even.
One interesting thing that you mentioned at the beginning was the psychological aspect of people actually setting the prices, of feeling that, oh, I don't know if I bring enough value. How about the psychological aspect from the consumers or the client's perspective? Is there anything interesting you could share for the people who set the prices?
Oh, we just had this conversation yesterday, and I was obsessing myself with the idea of mental math a lot, right? So how much is it worth to me? Like, what is the value per hour here? And like, we have one copywriter with one of the projects that I'm working, and he wrote like a brilliant headline. It was just like, develop your service in 20 hours and sell it to a customer for more than 500 euros. And initially I started calculating, okay, if you divide this, like this is 25 per hour, it's not that bad. Maybe this is something that I want to consume this training, right? And I was just so intrigued by the way how I did mental math there, because I was just like searching for my gain in this, and I was like gamified. I was literally hunting. It was a fun exercise for me. Okay, 20 hours doesn't seem a lot. 500 euros, not some money that I would mind having. So yeah, it was just like so intriguing for me. I was initially so hooked by it. You have a bunch of other like really weird quirks when it comes to pricing. Not all of them are like seriously tested. Some of them might be superstitions. So for example, I like to end my prices with 7 instead of 9, because I read a bunch of research that this is something that these days people are more prone to. So I'm always superstitious about this. I don't even test this like 9 versus 7. It's just something that I like to do because I believe it.
Okay.
But nevertheless, I have been doing a bunch of conversion rate optimization testing on online stores. And you can see that by just like changing the color button into something which is a contrast, so it doesn't have to be like orange or green, but something that pops out there, you can attract like a lot of more conversions. And I do believe that people are not making rational choices per se, because, when it comes to Word, I don't know, how many like free online books have you read in the last year or so?
I mean, I've downloaded hundreds, but I haven't read most of them. I only read those that I pay for, to be completely honest.
Exactly. And this is such a powerful mechanism, because this is the power of like foot in the door offer, right? Even if they pay like very little to just like enter your ecosystem, they are usually better leads if you just have them on your free newsletter forever and they haven't displayed like any willingness to pay. Sometimes I make this terrible joke that I don't even know if they have a credit card because they haven't demonstrated that yet, right? And it's also very coherent with product-led philosophy, if you think about this, right? Because everybody would like to try it before they buy it. And, at the end of the day, it's a little bit like fitness. If I'm not paying, I'm probably not exercising. So if a customer has a little bit of skin in the game and has pre-committed towards something, it's more likely that they will activate and sustain successfully with the product, and even they displayed willingness to pay, which is always a very good news for me. We could be talking like ages about pricing, like how many digits, but just like in terms of, when it comes to pricing, you have like this immediate effect, because people are very lazy, especially on the internet, and I don't like to put it like with decimal numbers, so that the number doesn't look like this big. The smaller amount of digits that you can display, the better usually tests when you are doing A/B testing and stuff like that. But I think that if you just like run a couple of usability tests or a couple of just like heat maps or some sort of other user journey stuff that you can do in UX, that you will find like 90% of the mistakes that are on the pricing page, and the new version will convert much better. Of course, like whenever something is highlighted as the bestseller or something like that, we are also naturally drawn to it because we follow the crowd and we are like tribal creatures again. So just like there are so many things that you could be doing, but some of the stronger ones is just like keep the digits as little as possible. Then if you have a bestseller, definitely like highlight this, because this is how you can anchor them towards this packaging. You could be doing like a bunch of different stuff in terms of pricing anchors, but I don't know how interested are you in this subject.
That's crazy that a lot of those ideas are so intertwined with the human biology.
We are not making rational decisions. Like macroeconomics one is just bullshit. Like we decide based on so many different factors, like trust signs, just like how coloring is on the website, if it's a welcoming page, how tired are we when we are making this purchase, if our phone rings or something like that. I mean, it's definitely not a rational behavior. In addition, with some apart from some procurement departments who like job is really to find the lowest price, but that again is something that you probably won't be engaging in when you are proudly going to market from a get-go.
Okay, are there any real life examples that were extremely interesting that you could share of the, projects or companies that you worked with in terms of pricing, maybe some cardinal mistakes and how they fixed it? Like to close this conversation with some actual examples that happened.
Cool. Let's do the product-led first, and then we'll do enterprise one. So with the product-led example, I was working with an edtech company. They are producing like this learning management system, and they're competing against Thinkific, Kajabi, and Teachable. And that's a really, really, really tough race, because you have a lot of features which are absolutely necessities, right? So everybody needs to be able to download the video and like do stuff there editing-wise. And it is an extremely commoditized market, but they still felt that they have a good differentiator in terms of providing better support, in terms of providing better integration, because the majority of LMS is quite clunky when it comes to just like payment gates and the ability to do landing pages and sales there. And last but not least, one of their value proposition was also to be cheaper, because whenever you go like big with your online course, this is like 100K a year or something like that in our world, you start overpaying about this. So they will charge you extra for the mobile app. There are like so many hidden costs that are occurring on this journey, and their value proposition was just like, we will be transparent, no hidden costs. We won't be punishing you because you're growing, that you would have to like speculate if you should be using this software more or less. And they had like a really interesting learning from their initial target audience. As they were promoting this product on Facebook groups with just like entrepreneurs and like people who are into cooking classes and stuff like that, they got a bunch of users, but they didn't manage to activate them. If you think about this in retrospect, it's really, really, really logical, because if they don't have the ability to produce the video yet, if they don't have the discipline for creating online stuff, and as well, if they don't have the selling skills that they would make their course a smashing success, that means that their LTV is going to be wrecked at best. So it's going to be really, really, really bad. When we pivoted to professional like course makers who make at least 50K a year and are in need in custom integrations and are maybe like a little bit upset with Thinkific or just like the clunky integrations that are killing their sales in their marketing funnel, willingness to pay was much higher, and we were able to increase the price, because with those people before, they were not even that serious about creating the course, and then like when it didn't sell, of course they stopped paying for this software. But those people, like the professional content creators, were sharks, and it was a really, really, really radical change in terms of how much value did we manage to capture. And what else is surprising, they required less support than just like people who are just starting out. So it turned out
because
to be
they were
better
already doing it. Yeah,
exactly.
So.
And they were very passionate and technical savvy in order to do all these setups to make the best value out of their advertising buck. So it was literally the pivoting of a target persona before we could like build a sustainable model there. The second example that I would love to share is a little bit more enterprisey, because with some of my one of my team who's making an AI builder, we were just like pre-investment, right? And we couldn't invest a lot in launch acquisition. We were still like negotiating how to get the initial funding, but still, you know how it is, the development gets really slow if only like 2 or 3 people are working on this. So it's very important to just like secure some funds in order to bootstrap till we get to a higher traction. And they actually went and pre-sold their service as just like a service for a local bank. It was not perfectly aligned with their product roadmap, but it brought enough money to the house that they continue the development of this product-led vision that they have, which is very community-driven and super cool. But by just like transacting with this bank, they actually got to the inception that they will create with this AI chatbot, whatever, 1,500,000 euros additional value savings in terms of how they handle customer support. And after they will have their use case, it depends like on founder's vision, they have like a really strong possibility to go to other banks as well, or financial institutions, like adjacent maybe would be insurances, and present this case and charge at least 100K per year to install this solution and maintain it, right? So this business might be having 2 divisions even. I mean, it's not my decision. I believe in focus, but you know what? We managed to go for one period which was quite stressful for them. So something that I'm super, super, super proud that happened, and it maybe displayed another like business opportunity that they will have. We will still have to tackle the product ad part of the business and see what's happening there, because you know when it comes to AI, there are some like, real costs that needs to be incorporated in this pricing. It is not an imaginary concept. But yeah, I just found that it is really interesting as the business roadmap and product roadmap sometimes interfere, and you're literally in dilemma. How do you want to bring this further? Would you be now B2B? Would you still be product led? What is going on? I mean, you can do anything, but you cannot do everything. And luckily, I don't have to decide this.
And it's interesting that you mentioned that, because the next episode we're going to have will be actually about aligning the product development and the business development. Yes, wow. So definitely it's worth subscribing to the podcast if any of the listeners is interested, because soon we are going to discuss this topic further. And I think with all the examples you shared today, all the tips and information, there's enough food for thought for the listeners.
I could talk about this for hours. Why are you stopping me?
Yeah, and that's why I recommend following Maja on LinkedIn, because she shares a lot of content. And if she's somewhere in a podcast or doing a webinar, there's always an information. And obviously, don't hesitate to order the book. Yeah, let's put it on the
Our
same.
cringe moment of like pulling the books up again. No,
yeah, but
like
absolutely worthwhile. And
appreciate it.
there's a chapter about pricing, but not only. So definitely worth checking the book. And Maja, also you have the online courses. Am I right?
Not yet.
Not
I'm right now
not yet.
testing this on a cohort. Cohort is a very
Okay.
good way how to test, like if there is potential for online learning. But I do have a free Substack as well. Substack is really cool. So right now I'm trying to test each week, each subject. So last week was product market fit. This week is pricing. Next week will be about sales and enterprise thingies. And I don't know, I'm just like on this cool journey of content, this delivery, and
yeah, we'll leave all the
it.
links in the description box, and I'm really interested in your content on Substack, so I'll definitely also check it. Yeah, it was a great conversation, and I've already learned a lot from you. So
Mission accomplished.
Thank you very much.
Thank you, Monika, for inviting me and for having this conversation. I know that like business science is not like favorite subject when it comes to tech circles, but you know what? It's a superpower. If you understand tech and business, you have a superpower.
Yeah, and there's an art to combining the tech excellence and the business know-how, and then it gives you a head start. Yeah. So it was great having you. I invite all of you who are listening to us to check Maja's profiles and links, and also to check the previous episodes of Tech Excellence Podcast and follow us for the upcoming ones.